All right, so good evening, guys. Let's begin. Let's begin. When others come, they can join. So I won't waste time because tomorrow is Sunday, right? So let me make Mr. Fortman the host. Good evening, sir. Let me make you the host. All right, so you can able to share your screen.
Okay. Good evening, everybody. If you can hear me, I want you to, this should be like a sound check before I share my screen. If you can hear me clearly, I want you to leave a message in the chat box. Just drop 111 111. Sorry, drop 777. Yeah. If you can hear me clearly, if my voice is not too, uh, if you are not straining yourself to hear me, all right? Just drop a message. Just drop a message. Uh, okay. So now do me a favor. This is a day two of this bootcamp. I want you to do me a favor of reaching out to your friends, reach out to your family, people that are supposed to be here that are not here, right? Do me a favor, do us a favor of sending them a message. Tell them to get on board. We're about to fly. Yeah, so we're about to fly. All right. Okay, guys, good evening, everybody. I'm going to clear my chat right now, right? Before we start, I want us to be on the same energy and frequency, right? Today's going to be an amazing time. I'm going to really have an amazing, I'm going to make, the entire process quite short, so that we can look at the chat and look at, uh, um, we can look at all the things together, right? So I want us to keep um, you know, I want us to keep together one energy, right? So what you're going to do for me is I want you to go on the chat box and also use the chat box in this Zoom session and also use the chat session for the Telegram, right? Where the bootcamp is accommodating us, right? I want you to do something. Just all you have to do is just type wealth, 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 wealth. So let's go. Let's keep that energy rolling. So just type wealth, 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 wealth. We just have a few seconds to do that together, right? We just want to keep that energy, right? Type in the chat box on Zoom. Type it also in the chat box in the Telegram channel as well, right? Just type wealth, 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 wealth. Let's go, guys. Let's go, let's go, let's go, let's go, let's go. Yes, sir. Yes, let's go. Right, so let's go. I think we're ready right now. We just did something, right? I believe in um, educating our subconscious, right? Just educate our subconscious, right? That we are worthy of it, right? So that was why I wanted us to start on that journey, on that note, and also wanted us to be on that same energy, right? So I'm just gonna give me uh, okay. So we're gonna start today. We're gonna be talking about um today we're going to be talking about liquidity. We're going to be talking about liquidity. All right. So it's going to be very fast. It's going to be more like a very short, maybe a brief session. All right. So yeah. So okay, I'm looking for something. Mm, I'm sorry, guys. Just give me minutes. It needs to be so weird. Okay, I just wanted to make the charts, the entire chart. Um, yeah, clean. Okay, so we are good. So now we want to talk about liquidity, right? We want to just talk about liquidity. We want to spend a handful of time talking about liquidity, right? And it's my delight to do this with us today. Yesterday we spoke about structure, right? If you go through the videos when the recording is being drawn, all you have to do is just go through the videos as much as you can, right? Just go through the videos as much as you can, right? Today we're going to be talking about liquidity, right? And I'm going to be exposing our mind to the kinds of liquidity that we have available, how you can approach the charts using liquidity, using just structure and liquidity, how you can build higher time frame bias using structure, and uh, how you can approach the chart build. I don't know. Yeah, I don't know. Yeah. So let's just go, right? So when we talk about liquidity, right? So let me just put this up as at its custom so that people who join us will know what we're talking about, right? So look at this liquidity. So now one of the things, let me just like talk randomly. So one of the things I want you to all to understand is that the market is liquidity engineered, right? Yeah, the market is liquidity engineered, right? The market is liquidity engineered. And this is what I mean. What I mean is that if you have structure in place where the market gives to you consecutive higher highs and higher lows, higher highs and higher lows, higher highs in a bullish market condition. The reason why price is able to move from this particular low to this to create a new high is because of the injection of liquidity, right? I love to call it liquidity injection, right? Because for price to move from a particular area up to a particular area where it breaks a particular high, it is because liquidity has been injected to move from this particular point where it is here to this particular point where price is at the moment. So if price moves down, it's because of liquidity that was actually taken off, right? So it leads to like a little bit of retracement, right? Then when price, again, liquidity is being engineered again, we see price rally from this particular low to this particular high. So you can see how, all you just need to know in trading is structure and liquidity, right? The ability to know where liquidity is being engineered from, and knowing how to find your way around price, right? So when you talk about liquidity, like yesterday, there are two types, right? Okay, there's no need to write it out. So there are two types of liquidities you always want to pay attention to, right? I'm not so good at typing fast, but let me just put this here. We have internal liquidity, and we have external liquidity, right? This internal liquidity is what a lot of people love to call inducement liquidity. So I'm just going to shorten it and write IDM, right? So these are the two major types of liquidity you want to. Now, these are the types, right? These are the types. So follow me, right? Follow me. These are the types. So types of liquidity that we have. The types of liquidity we have are internal liquidity and external liquidity. Then we have what we call the forms of liquidity. We have the forms of liquidity. These forms of liquidity is what in fact, what I will use to actually frame my weekly bias, my daily bias, or my intraday bias. I use the forms of liquidity. For the forms of liquidity, we have what we call the previous daily high, we have the previous daily low, we have the previous weekly high, we have the previous weekly low, we have the London high, we have the London high, we have the London, okay, let me not, so that it will not be so long. We have the London low, we have the Asian high, and we have the Asian low, right? So we have also the last one, we have the New York high, and we have the New York low, right? So these are the forms. These are the forms of liquidity. So now one of the things I'll tell you for free is that I frame my bias for trading, right? Because I used to have what we call like a daily bias, but I don't really use daily bias anymore, right? What I use right now is weekly bias. So which means that I frame my trade from the previous weekly, I frame my trade using the previous weekly highs and the previous weekly lows, right? So I use the forms of liquidity to be able to frame my bias. So what I have all through the week is that I'm just going to have like a weekly bias. Like for example, I want to expect maybe GBP USD to actually sell all through the week from Monday to Friday, right? And the reason why I'm having that weekly bias on from Monday to Friday is because I've been able to frame my trade from this particular ones, previous weekly high and previous weekly low. So it means that all through that week, the only trade that is going to be high probable for me is going to be sales. So now the caveat is that I'm not saying that they're not going to be buys. They are going to be buys, but what stands as highly probable trades for me because of my bias from the weekly time frame is going to be sales. So when I see sales, and see sales that gives to me my kind of entry, then I'm good to go, right? So now these are the forms of liquidity. We have the previous daily high, the previous daily low, the previous weekly high, the previous weekly low, the London high and low, the Asian high and low. We have the New York high and low. There is one that is missing here. We also have the previous monthly high and the previous monthly low. I didn't use it so much, so I don't put it there, right? So now, when you talk about the forms of liquidity for the London high, Asian low, New York high, New York low, this one helps you to trade sessions, right? This one helps you to trade sessions. So let me just quickly talk about this. The market cycle, when you talk about market cycle in liquidity, the complete market cycle for trading is 24 hours, right? So we have a 24 hours trading market cycle, which means that for 24 good hours, liquidity is going to be injected at 3 different major sessions, which is the London session, the Asian session, and New York. We know that the Asian comes first, London comes next, and New York comes last, right? So for a complete trading cycle, we have a 24 hours trading cycle. Now, one of the things I always say to my guys is that for that 24 hours trading cycle that we have, Asian session, right? Every 4-hour candle, right? So for Asian session, let me put this London session and the New York session. I want to show you something now. Now, a complete trading cycle is made up in 24 hours, but the complete 24 hours is made up of each sessions, and each sessions is made up of 2 4-hour candles. So which means that Asian session is made up of 2 4-hour candles, London session is made up of 2 4-hour candles, right? Then New York session is made up of 2 4-hour candles. What that means is that if you put 2 4-hour candles, 2 4-hour candles, this is 8, this is 2 4-hour, 2 4-hour, this is another 8, 2 4-hour, 2 4-hour, this is 8. When you sum everything together, it will give you 24, right? So it gives you a 24 hours trading cycle, right? So one of the ways you now begin to form, so this is why when you hear stuff like trading cycle, right? I've come to a point in trading that there's nothing anybody wants to say now that sounds big anymore, right? Just simplicity is the greatest sophistication you can ever experience in trading. Just keep it simple. So when you hear anything about trading cycle, liquidity cycle and all of those things, this is what it means. We have 3 different sessions, Asia, London, New York. For each sessions, 2 4-hour candles makes up Asia, 2 4-hour candle makes up London, 2 4-hour candle makes up New York. So that is when we talk about the entirety of the complete market cycle, right? How liquidity is being, injected all through the cycle. So what it means is that, for example, we know that Asian session many a times is likely going to be consolidating. So we have the 2 first 4-hour candle for Asia is going to consolidate, right? So I'm starting with the forms of liquidity first, right? So it's going to be spontaneous, but don't worry, I'm going to cover everything. So we have the first 4-hour candle, the first 2 4-hour candle for the Asian session. They are going to consolidate, and after consolidating, we have the London opening price, right? So what's you now begin to see is that at the beginning of the London session, when we begin to have the next 2 4-hour candle that makes up the London session, right? There are 2 liquidities that has actually been engineered. We have the Asian high and we have the Asian low, right? So one of the things you will see is that what I've noticed over time is that sometimes price trades in London session to take the Asian high, sweeps that Asian high, which is going to serve as your liquidity, takes it out, breaks 2 structural points, price comes back, and the next target is going to be the what? The Asian low, right? After price takes out the Asian low, you will see that what you will now notice one thing about the market cycle that price does. Asia will consolidate, London is going to buy, and New York is going to sell. London is going to sell, while New York is going to buy. The reason why New York is going to buy is because London high that was created here came to take out the Asian high. So we have this high as your London high, right? So now New York is going to buy because this London low is going to be taken when we come into the New York session. So price is going to take out New York low, and New York is going to take out London low, and price is going to continue to buy until this London high is taken. So we have 3 different circles, right? We have the Asia, London, and New York. So what did Asia do? Asia was consolidating. What did London do? London sold. What did New York do? New York bought, right? So one of the ways I make it simple for people to understand something is that for the three complete market cycles that we see, right, which makes up the Asia, London, and New York, right, one of the things I always tell them to see is that if Asia consolidates, right, two things will happen in London and New York. The first thing you want to see in London and New York is that is either London sells and New York buys, or London buys and New York sells. And the third thing, three things actually that you will actually see if Asia consolidates. There are three things you will see happen, right? If London sells, New York will buy. If London buys, New York will sell, right? Then we have if London sells, New York is going to continue to sell, or if London buys, New York is going to continue to buy, depending on the directional bias for the week or for the day, right? So it is never always more than this. It is always as simple as this, right? So this is what makes up the complete, trading market cycle that anybody would want to make look big to you, right? So we have the Asia, London, and New York, right? And like I said, 2 4-hour candle makes up the Asia, 2 4-hour candle makes up the London, 2 4-hour candle makes up the New York, right? So when you put the summation of all of those 4 4-hour candle, 8, 8, 8, right? 8 plus 8, 16, plus another 8, we have, is it up to 24? Is it 24, right? I think that should be 24, right? Is it 24? Somebody unmuted his mic.
Yes, yes, it is.
Yes.
It is.
Yes,
Okay,
it's
thank you.
24.
Yeah, thank you. Yeah, 24. Right. So that's what makes up the complete trading market cycle. So now let's talk about let me this is even the simplest one, the types of liquidity you want to just pay attention to, right? There are two major types of liquidity, right? Internal liquidity, but people, because of they want to sound high and mighty, they call it inducement liquidity, or they call it a trap, right? So one of the types of liquidity is internal liquidity, and the next one is called the external liquidity. It's as simple as this, right? The internal liquidity is always known as the inducement liquidity, which is always going to serve as your trap. Like I said yesterday, if you paid attention to yesterday's class, I said something that, you don't have, for every complete trading range that you have, right? So when you have a complete trading range, what's one of the characteristics of a complete trading range is that there must always be a trap or your inducement or internal liquidity, right? Because I told us that there's one particular thing we have all experienced in our trading, right? One, that thing is that you pick this place as your range low, you pick this place as your range high, then you pick up one other block here, you are looking to buy from this particular point, price will kick you out, then continue to go in your direction. Yeah.
Bluetooth mode.
Oh my God. Okay, so there's one thing you have always experienced in your trading. You see that price, you have like a potential area of interest POI or area of interest AOI that you're looking to buy from. Price is going to blast through your AOI, take your stop loss out. Then at the end of the day, it continues to go into your direction. So you begin to ask yourself why. Then, to console yourself, you tell yourself that, it's a normal loss, right? I'm still going to stick to my trading plan. No, not every loss is actually normal. You should understand the logic behind why your stop loss was actually taken at that point and why it still went in your direction. Like I said yesterday, the conventional way that everybody looks at a defined range is this. They look at a defined range like this, right? They believe that this is a range low, this is a range high. So you want to only be looking to buy from this area, especially when you have an order block that was responsible for the break of this particular recent high. So you have another block here, or you have an imbalance that you want to see price actually come back to, to rebalance or to mitigate, right? So, but I said, one of the ways I want you to start looking at the chart right now is that when you want to define a complete trading range, I love to call it ABC, right? Let this low be your A leg, let this be your, this light side be your B leg, and this one be your C leg, right? This thing that you are seeing is what many of your idolos on Twitter are, they feel like they're hiding from you, but I bet you this is it. So I love to call it the ABC pattern, right? I love to call this point A leg. I love to call the point the B leg. I love to call the C leg, right? How do we now interact the ABC pattern to this internal liquidity and external liquidity? The C leg is where you have your external liquidity, which is going to serve as your target, right? This B leg is where you now begin to have your inducement, which is going to serve as your inducement or internal liquidity, right? This is the trap. You want to see price trade and take it out, then continue until this external liquidity is actually taken, right? So it's as simple as this, having this ABC pattern. But I'm going to show you the logic behind this pattern. Like, I'm going to unveil the entire logic behind this pattern. My volume is, oh my God, my voice has dropped. Please, can you confirm, please? We have a lot of things to do. Can anybody confirm if my voice has dropped, please? Somebody said my voice has dropped. I don't want to stop. I just want to keep going. Sounds okay. Can I go ahead? Please, can I go ahead? Just let me know. Okay, the volume is okay. Okay, so now I'm going to show to you the, the logic, like the logic behind this ABC pattern, right? I love to call it the ABC pattern, right? Just to keep it as simple as possible, right? So it is called the ABC, right? The B here stands for your inducement liquidity, and it also stands for your internal liquidity. The C here stands for your external liquidity, which is also going to be your target, right? And for you to have a complete trading range, C takes out the B, then the B takes out the C, right? You have a complete trading range. A complete circle has actually been, been achieved, right? The internal liquidity was taken and price runs straight to the C leg, right? Like if you remember yesterday, if I reiterate a bit, I told us that one of the ways that you are going to reduce your losses in trading is if you are able to ask yourself two questions, right? The reason why price, after taking this particular high, price starts to retrace to take out the inducement liquidity and price comes to take out this one is because we are coming from somewhere. I said something yesterday. I said, when you get on your chart every day, ask yourself two questions. Where is price coming from? And ask yourself, where is price going to, right? So where is price coming from? In a bullish market structure, every higher high is an external liquidity, right? And now what you need to understand is that price moves from external liquidity to internal liquidity, right? And it also moves from internal to external. So what it means is that after price takes out external, it takes out internal. After price takes out internal, it comes again to take out the external, right? So what I'm trying to say is that in a bullish market condition, right, every higher high is an external liquidity. Every higher low is an internal liquidity. That is all I'm saying. So you ask yourself two questions every day when you get on the chart. Where is price coming from? This is where the price is coming from. Number one, we took out this external liquidity that is resting here, right? Then we started to retrace. After retracing, we took out the internal liquidity here that is going to serve as an inducement. We broke structure. Where is price now going to again? We are going straight to this particular high. So the reason why we can see this, people call it, oh, don't catch retracements, right? I'm defining all the terms you must have heard on me on social media, on Twitter or any group. People say, oh, the trend is your friend. Oh, the trend is your friend. Don't catch retracements, right? Now, this is what they call retracements, right? In a bullish market structure, after the most recent high is taken, we expect a retracement for the internal liquidity to be taken before the entire move now gets to start, right? So now, how you get to know that you are catching a retracement is that one of the things you do is that if you're catching a retracement, it's not going to be a long-term trade, right? You are targeting the nearest area of liquidity because price can actually take one of the liquidities that can be very close and price just continues to move. So two questions, like I say, where are we coming from and also where are we going to? So where are we coming from? We're coming from external liquidity. Where are we going to? We are going to internal liquidity. After taking out internal liquidity, we ask ourselves that same question. Where are we coming from? This is the origin of where we are coming from. Internal liquidity has been taken. Where are we going to? Oh, external liquidity, which is the C leg, right? So you see people, this is, oh, sorry. So this is one of those patterns, like if you are very active on Twitter, this is one of those patterns you see a lot. People tell you that, and it's one of the best patterns. I mean, it has one of the best winning rates. I'm not trying to hype or something. I'm just trying to tell you. So you see them trading something like this. It's as simple. So now let me give you the entire logic. But one of the things I'm going to expose to you for free here is that all that you see here, is just, no matter what they post for you on Twitter or any social media, what you're seeing here is an entry model, right? Your entry model is useless if you don't know how to build buyers. Like if you don't know how to build daily buyers, weekly buyers, how to build daily buyers and weekly buyers. I'm going to teach you that for free, and I'm going to make it as simple as possible. All you are saying that you are seeing here, right, where price moves from internal to external, is just an entry model. But your entry model is useless if you don't know how to build buyers with this. If you don't know how to build buyers with the previous daily high, the previous daily low, the previous weekly high, the previous weekly low, which are the forms of liquidity. Sorry. Sorry, I'm trying to sneeze. It's like they don't want me to share these things. I don't know why they're making me sneeze. They don't want me to talk about. I'm going to say it anyways. So all you are seeing here is an entry model, right? Everything you see on social media, and this is why people call for mentorships, right? People call for mentorship, which I'm not against, right? They only show you the entry model that has worked. You see the screenshot of the entry model, but they don't show you the bias, how to build bias, right? So so this becomes clear now. How do you begin to build bias weights? How do you build bias with the previous daily high, the previous daily low, the previous weekly high, the previous weekly low? So this is where it even gets sweeter and interesting, right? Now, don't forget now, our entry model is built on structure and liquidity, meaning that in a bullish market condition, we only want to be buying from internal liquidity to external liquidity. In a bearish market condition, the same thing, you just invert this particular thing. Now, you know what I'm talking about. Entry at internal, exit at external, like right? That's for bullish and bearish. So now this is our entry pattern, right? Subjected to structure and liquidity. So now the next thing we want to do is how do we build bias and in the same time subject all of this entry pattern to building bias. So now let's build bias now, weekly bias with the forms of liquidity, right? So one of the ways you build bias with the forms of liquidity, I'm going to draw this for you now. So let's say, for example, we are coming from the weekly time frame, right? This is the weekly time frame, and we have something like this. Price takes out. We have we have a weekly candle, right? We have a weekly candle. This is a weekly candle that we have. Now this is a previous weekly high. So we're going to label this the previous weekly high, and we're going to call this the previous weekly low, right? So now the previous weekly high, the previous weekly low, right? So let me man, this is the simplest way to build bias that I want to show to you guys. Trust me, you just follow, right? Previous weekly high, the previous weekly low. We put this at the bottom. So now this is a previous weekly candle, right? This is a previous weekly candle, right? So one of the ways that you will see that one of the things I said, one of the things I don't know if I've said it, but let me mention it about liquidity is that price moves from one point of liquidity to another. It moves from one point of liquidity to another. So that what it means is that if price takes out a previous weekly high, I'm very sure like 80 to 70% of the time, after taking out the previous weekly high, price runs to take out the next previous weekly low, right? It might not be the exact previous weekly low of the same candle that the high was taking, but it might just be like another candle inside of it. That price will just run and come and take that. It must run to take out a previous weekly low. It is always like that. But I want to show you how to build bias as simple as possible, subjecting it to your entry model. So if we have a previous weekly high, okay, so let me put this before it skips my thoughts. So we have weekly to daily. We have the weekly to daily. Then we have the daily to H4. Then we have H4 to H1. I use this as well too. But I want to, you see, this is what I will show us what it means when people say that the market is fractal, right? So, but let's start with weekly to daily, right? How do you build bias? So if you are coming on the weekly time frame, you have price, you see price take out, you see price has created a previous weekly high and a previous weekly low, right? Then you see another candle in a new week that is being formed. When the new week starts and you see that price actually trades above the previous weekly high like this, it trades above it, but at the end of the day, it closes below it, right? Then what do you notice? You notice that what price did actually was that price took out the previous weekly high, right? After price took out that previous weekly high. Now look at this. What has happened here? The previous weekly high has already been taken, right? So it says to us that with your understanding of liquidity, you know that the next liquidity points that price should run to should be another previous weekly low, right? It might not be this exact weekly low of the same candle. It might be another weekly low of another candle that is inside this weekly candle range, right? It might be another weekly low. Let's just assume another weekly candle is inside this place. So we are picking this place as the second previous weekly low. So what do you see that happens on a weekly time frame is that price takes out, price trades above an old weekly high, right? After trading above an old weekly high, price begins to close below, and you can see that what you notice is the price actually took out the previous weekly high, right? This happened on the weekly. So one of the ways you confirm, because of what has happened here, right? Because of your understanding of liquidity and how it works, the price moves from one point of liquidity to another, right? So one of the things you now begin to do is that look at this from weekly to daily. Because of how this weekly time frame has taken out the previous weekly high, what you want to do is that go to the daily, right? You scale to one time frame lower, right? What you want to go to one time frame lower to see is that this liquidity sweep you are seeing on the weekly time frame should lead to two things on the daily. It is the daily that is going to confirm if you are going to have sales all through that week till these weekly lows are taken, or this guy might just sweep this particular weekly high and he might just continue to buy. Two things are going to happen on the daily to confirm your weekly bias, right? The two things you want to see happen on the daily is that you want to see the daily sweep liquidity and break structure. Sometimes on the daily, one structural point break is allowed, but most times what makes it even stronger is even when we see two structural points break, right? But what you want to see on the daily is that the weekly has swept the previous weekly high. The daily needs to confirm this bias. If you are going to be seeing sales, the daily needs to confirm this bias by doing two things. Number one, sweeping liquidity and breaking structure. And number two, you have to see what we call engulfing. If the daily engulfs, right? If the daily engulfs after this weekly has taken it out this previous weekly high, because of this engulfing you are seeing on the daily, go to the 4 hours. This engulfing you are seeing on the daily is on the 4 hours a liquidity sweep and a break of structure. It means that the daily and the 4 hours has confirmed that we are going to be having a bearish bias all through the week, right? So this is what you do. So now because of how the daily and the 4 hours now has been able, you have been able to build your bias from the weekly time frame down to the daily, from the daily down to the 4 hours. All you now have to do is subject your entry. See, this is how you subject. You don't just work with an entry model. You subject this entire entry model that I'm showing to you. You are subjecting it to this weekly or your daily bias, right? So now this one I'm talking about now is I'm talking about how you build weekly bias, right? So when you have a weekly bias that is being built, for example, price takes out the previous weekly high, closes below, daily confirms your bias if it is going to be bearish by doing two things. Number one, sweeping liquidity and breaking structure, or number two, it has to engulf, right? The moment it engulfs, all you are now beginning to do is now you can now begin to pay attention to, like, for example, you can pick an order block, which you call like your higher time frame point of interest, right? This is what people call higher time frame point of interest. So you can pick an order block on that daily. Let's say you pick the daily order block. We are using the second thing that can happen, which is the engulfing. So you pick the order block that was actually engulfed, and all you want to see on the lower time frame, maybe 1 hour time frame or 30 minutes, is that inside of this order block, you want to see price give to you a liquidity sweep, a break of structure, the ABC, right? The A, the B, the C. Then now you want to see price take out the B leg and price continues to move to the downside. You can see how we are not trading internal and external liquidity blindly. We are not trading it blindly. We are subjecting it to higher time frame bias, right? Higher time frame bias. So this is the fractal nature of the market, right? If we are together and you are catching it, I mean, you are learning something, just drop five, just write wealth in the chat box. Just write wealth. Come on. I just want to be sure I'm not talking to myself. I want to be sure we're together. I want to be sure we're together. Let's go. Let's go. Yeah. Good. So now, now you can see how I'm telling you how to build a weekly bias, right? How you can anticipate, like you can have a weekly anticipation. Like you can tell yourself, this week I want to see GBP USD sell, because now this is a logic to trading, right? You have a logic to trading. You say, okay, I'm expecting weekly to sell because I'm expecting a bullish bearish bias for GU this week because the previous weekly high has been taken, and after the previous weekly high has been taken, the daily has swept liquidity and broken structure. So daily has confirmed your bias for you from the weekly, right? So daily is now in correlation with what is happening on the weekly. The same thing now, if you don't, maybe you don't have that patience enough to start waiting for weekly bias to start forming through the daily to the 4 hours, right? You can now move to what we call the daily to the 4 hours, which means that now if the previous daily high is being taken, right? If previous daily high is being taken, if the previous daily high is being taken, right? For you to confirm your bias after the previous, maybe an old daily high or your previous daily high is being taken, what confirms your bias is the 4 hours, right? Is the 4 hours. The 4 hours confirms your bias by doing two things again, like we said. What you want to see on the 4 hours after a previous daily high is taken is that you want to see a liquidity sweep and a break of structure. Like I said, a two structural point break is always good, right? It makes the structure, it makes the structural shift or break of structure, whatever you want to call it, it makes it very strong. So 4 hours confirms for you your directional bias for the daily. The daily confirms your directional bias for you for the weekly. The H1 confirms your directional bias for you for the H4, right? Don't forget, this H4 is just if you want to be like an intraday trader. For example, people who say, oh, I trade New York, I don't trade London, I don't trade Asia, all I trade is New York, right? I'm going to show you how to do all of that, right? I don't frame bias from H1, H1. I frame my bias from weekly, and I allow everything to unveil from daily straight to H1, right? Most times I even take my entry from H1, right? So most times I take my entries from H1. So for the daily, if you're going to frame your bias on the daily time frame, after a previous daily high has been taken, we know that the next place that price should run to, it should be a previous daily low. And like I said, it doesn't have to be the previous daily low of that exact candle that the previous daily high was taken. No, right? What you want to now begin to look for is that after the previous daily high has been taken, and you see that daily candle close below after sweeping that liquidity, sweeping the previous daily high, right? What you want to begin to confirm the directional bias is your H4. H4 has to do two things. H4 has to either sweep liquidity and break structure, or H4 now begins to give to you what we call the engulfing, right? Where price engulfs one particular candle. If H4 gives to you an engulfing, scale down to one time frame lower, go to H1, right? The engulfing you see on the H4, on the H1 is going to be what? Liquidity sweep and break of structure. So H1 has now confirmed this bias with the H4, and H4 overall is confirming the bias for the day, right? So all you are now doing, right? All you are just doing is that you are not trading internal liquidity and external liquidity blindly. You are not trading. This is one of the things that nobody will tell you, right? But I'm sure my brother will tell you. I mean, Geoffrey, um, the founder of Elektronfx Academy. I know he's a very sincere, honest person. I know he's going to tell you this, right? So, but a large number of people are going to tell you that everything you see on Twitter, everything you see online is an entry model. But there is no sense in understanding how an entry model works if you don't know how to build bias. Like if you don't know how to build bias, you must learn how to build bias either from the weekly, and the daily has to confirm your weekly bias by sweeping liquidity and breaking structure. The 4 hours has to confirm your daily bias by sweeping liquidity and breaking structure or engulfing. And the 1 hour too has to confirm your 4 hours bias by what? Sweeping liquidity and breaking structure. So when you talk about H1, and this is what we call the fractal nature of the market, that what happens on the weekly to daily happens on the daily to 4 hours, and also happens for 4 hours to 1 hour, right? So now all we are trying to say is that, you know, the same thing, this H4 to H1 is just for those who trade, they are session traders, people who say I'm a New York person, right? So if you say you're a New York trader, for example, this is what it means, right? We have said 2 4-hour candle makes up Asia, right? Then 2 4-hour candle makes up London. Then New York, 2 4-hour candle makes up New York, right? So we have 2 4-hour candle, 2 4-hour candle, 2 4-hour candle, right? Now we want to build a bias with H4 to H1. With this alone, you should already understand how to build a session bias with this 2 4-hour candle. For example, it is always said that Asian session is going to consolidate, so which means that the first 2 4-hour candles for the trading market cycle is actually going to consolidate. So we expect either of this liquidity, the Asian high or the Asian low, to be taken. So when the second 2 4-hour candle, which is making up the London, is going to be formed, right? If it takes out Asian low and Asian low is being swept, right? And it has broken to structural points, we already know that the next target is going for is Asian high. So what you are going to do as a London trader is that the next 2 4-hour candle, which is for the London window, is what is you are going to be trading to take out Asian high. The moment Asian high has been taken and your target has been achieved, you are out already, because we know something is going to happen. London low has been created when the second 4-hour candle for London has been created. London low has been created, right? We know that for sure. New York is going to sell, and the next target is going to be London low. Let me tell you this for free. I don't know if Geoffrey is going to remember. There was a time that, you know, we were in a particular group together. I was looking to buy a particular pair. I think it was EU, and Geoffrey said, this thing will hit your stops because it has to take out London low for the previous day. And I just said, let's see what happens. I left my trade there. I left it there. And immediately the team took out the previous day London low. No, it was even the same day. He said, no, he said, okay, I was trading New York for GBP USD or EU. And he was like, don't buy it. That big break of structure is a manipulation, right? It's a false break of structure. And he told me that it was going to take out the London low before buying. and I left it there. I was like, this thing has swept liquidity and it has broken structure. I'm not interested. I just want to buy. And I tell you for free, it took out my stops and immediately took out my stops. It started to buy. And it came to the group and it was like, I told you. And I was like, wow, wow. So, it was foreign to me, right? Not until I now understood, the complete market cycle, which I'm also showing to you, right? So price takes out the London high, the next target is going to be the London low. So you can see how price is liquidity engineered. We move after taking out Asian low, we take out Asian high. After taking out London high in New York, we take out London low, right? Then we have a complete trading market cycle. I mean, there are a lot of messages here. My voice is low. Please, can we confirm? Okay, I'm speaking fast because of the time. I mean, I feel like we've not even done anything yet, and we have used 44 minutes already. And because we have church tomorrow, that's the reason I'm talking. Oh, volume is okay. I think it should be your network. If you're complaining of network volume, it should be your network. So I want to show us with the little time we have, right? I'm trying to clear my chat. So the two types of liquidity we have, internal and external. That is what helps you to frame your bias. That is what helps you to create your trading model, right? But to frame your bias, you need the previous daily high, the previous daily low. You need previous weekly high, previous weekly low, right? So one of the things I want to add before we go straight to the chart, I want to show to you how this thing works, like how this trading model works that you see. I'm sure a lot of you must have seen it online. You must have seen it everywhere. How the logic behind it, like I said, what do I call it? I call this the A leg. I call this the B leg. I call this the C leg. Now, what do we call the B leg? Internal liquidity or inducement liquidity. What do we call the C leg? External liquidity. Simple as ABC. Don't complicate trading. No. Right? So now what is the logic behind it? Now for the A leg, the logic behind the A leg is that the A leg must satisfy three conditions. The first condition that the A leg must satisfy is it must sweep liquidity. The second condition, it must break structure. Now, this is where you have to pay attention. Now, the first condition, we are dealing with the entire logic of this trading model that you are seeing, where price moves from internal liquidity to external liquidity, or you call it from inducement liquidity to external range liquidity. So now the logic behind it is that A leg, let's deal with the A leg. A leg becomes your strong low, right? And what makes up your strong low is that your A leg must satisfy a few conditions. The first condition your A leg must satisfy is that it must sweep liquidity. Number two, it must break structure, right? Now, the source, right? The secret is not just in the break of structure. It is in the momentum push. You want to see that push. You want to see like an heavy move, right? You want to see what ICT calls it a displacement, right? You want to see that momentum push to the upside. You want to see that displacement to the upside, right? The blueprint in that A leg is in that displacement, right? It is in that displacement. So now the A leg must satisfy two conditions. Number one, sweep liquidity and break structure. But the break of structure is not just a random break of structure. It must have like a displacement in it. The B leg is what you call your inducement liquidity, which means that price creates price creates a new higher low, right? That higher low must satisfy two conditions. Now, if your higher low, it becomes your inducement liquidity, right? What validates it? What validates it that price is going to come for it after creating A, B, C? Price is going to come for the C leg and continue to move to the upside, right? So what validates your inducement liquidity is that it must be resting in a market inefficiency. The market inefficiency, forget grammar, just understand how it works. The market inefficiency is in the displacement. That displacement, sometimes it is just in one candle, right? Price runs to the upside, like price displaces. So what price needs to do, right, is that after the displacement, price needs to bring to you, it needs to bring for us a little bit of market efficiency, right? It needs to make the market efficient a bit, right? So now, what makes your B leg valid is that this inducement liquidity valid is that after the momentum push to the upside, you can see how we are dealing with A and B now, because that is where the major work is. A satisfy the condition of sweeping liquidity and breaking structure. B now satisfy the condition of creating the new higher low, which serves as your inducement liquidity, but it must be resting either above an order block that needs to be mitigated or an imbalance that needs to be rebalanced. I said something yesterday, if you can remember, I said that the market seeks to do two things. Write it at the back of your journal, don't forget it. The market seeks to do two things: rebalance and hold imbalance, and also mitigate an order block, right? So the reason why the market is attacking liquidity, right? Two things that the market seeks to do: attack liquidity and also rebalance and hold imbalance. What I mean is that after price creates a C leg, right, which is the C. Your C, there's no logic behind the C. The C is just your target, right? It is what we call yesterday our weak high. Your C is your target, which is going to serve as your external range liquidity or your external liquidity, right? So if you have a complete trading range like this, please can you mute your mic? It sometimes distracts. So it can almost make me lose my train of thought, right? So if you have your A leg, your B leg, and your C leg created,
Please.
bro, come on, what's this? Can you just mute your mic? So what you have to do is that you just want to put that thing I just said into practice. The market seeks to do two things. Number one, it is either attacking liquidity or rebalancing and holding balance. What makes your inducement liquidity valid is that there must be an order block. The order block that was responsible for this impulsive move to the upside and broke structure, right? It must be resting below the inducement liquidity. Sometimes price doesn't come for the order block. There are two things you will find when market gives you this inefficiency. That is the A leg that breaks structure. Is either you have an order block that price needs to come back to mitigate, or price, there's always going to be like an imbalance that is going to be resting there. If it is not an imbalance, it is also going to be an order block. So price seeks to do two things. Number one, rebalance and hold imbalance. And number two, attack liquidity. So what do we expect price to do? Attack inducement liquidity, rebalance the old imbalance, or rebalance or mitigate the other block. So where are we coming from? We're coming from internal liquidity to external liquidity. Are you seeing how this is the logic? I mean, this is the logic, right? This is the logic behind this pattern. Go and ask anybody, any mentor, anywhere. This is the logic behind it. Go and tell them that it was faults that exposed it to you, right? Things that people will charge you $200 for, $500. Geoffrey has decided to host it for free. Yeah, right. And I'm exposing it to you. Put it anywhere and tell them I told you. This is the entire logic behind it. So now, let's do a little bit of chat work. Are we together? I want you to, just write in the chat box, wealth, 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 wealth. If you are still with me, write wealth, 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 wealth. Come on, wealth, 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 wealth. Come on, just put wealth, wealth. Put it, man. Wealth, wealth. Just go ahead. I won't be sure we're still together. Yeah, I'm enjoying myself. I'm enjoying myself. So this is crypto, Sha, but I can show you something. I can show you something on crypto. Let me show you. Yeah. Now, look at this. What did you notice here? This is a weekly time frame. Did you see how this old weekly high, the previous weekly high was taken? After the previous weekly high was taken, do you know that this is the next weekly low, right? You can see how this previous weekly high, not naturally, this is the first previous weekly high that was taken. Are we not expecting this previous weekly low to be taken next? Yes. But has it been taken? No. But what did you notice? We took out the previous weekly high. The next weekly candle gave to us a bias that we're going to sell. Did we sell? Yes. Did we take out the next previous weekly low? Yes. Are we still coming to take out this previous weekly low? Yes, we are still coming to take out. This is crypto, Solana USDT. Are we still coming to take out this previous weekly low? Yes. Now let's frame bias. Where are we coming from? We are coming from the weekly time frame. Now let's go to the daily. Let's go to the daily. So don't forget, we're using forms of liquidity, right? All right. So nothing deep. nothing deep. All right. So look at this. You can see how we came from the weekly down to the daily, right? Now, this is the daily. It was not really so sure for us if this was like an engulfing, right? It was almost like an equal candle, right? It was almost like an equal candle, right? But you would notice one thing, price came down here. So look at this. Let's move to the line chart. I love to use the line chart a lot. Look at where the bearish bias was confirmed. We had a liquidity sweep. We had a break of structure, right? You can see this liquidity sweep, break of structure. Line chart shows to you. I said something yesterday that the liquidity, like money, is in the body of the candles, not in the wicks, right? Look at this, A leg, B leg, C leg. This is daily. But don't forget, we are framing our bias from the weekly. Now, this is daily. What did you notice? A leg, B leg, C leg. I told to you that the B leg is always going to be your inducement liquidity, right? A leg is going to be your strong high because it has swept liquidity and it has also broken structure with the momentum push to the downside. Your next target is going to be C leg, right? So now, and look at this. Another thing you have to settle your mind is not always going to be picture perfect. So this is the B leg, right? Did you notice that thing we drew? What we drew on when we were just explaining it from the beginning, right? What did you notice? Snipe. Did we snipe or not? Right. We did. Come on, we did. We did. Now, we still have this C leg on Solana USDT to be taken. This is the C leg on Solana USDT that we still want to take. This is the C leg. It is yet to be taken yet. We still have this C leg to be taken. But if we frame our bias from here, look at this. What did you notice here? You can see how we have swept liquidity. Which liquidity are we sweeping here? Previous daily high. This is what? A daily candle. This is the previous daily high. The next thing that, like I said, if you want to frame your bias from the daily to the 4 hours, right? You need 4 hours to confirm your directional bias for the daily. Now we have swept the previous daily high, right? Go to the 4 hours and confirm your bias. Don't stress your life. What can you see on the 4 hours? Look at this. This is Solana USDT. Look at this. Move to line charts. What can you see? I'll make it clear for you. Higher high, higher low, higher high, higher low. Break sweep of liquidity. We broke 2 structural points. We broke 1, we broke 2. Beautiful. We have this low to still be taken. Okay, right? So 4 hours is as we set. Now look at this, 4 hours as we set. Liquidity sweep, we have the break of structure. So I will use this one as a break of structure. I'll just use this part. Normally we can use, is ideally supposed to be body to body. This is where the break of structure happened. But because of how this 4 hour looks, I want to move to the 1 hour time frame now to make it a little bit clearer. Just give me a minute. Come on, put together, guys. Look at this on the 1 hour. So question, train your eyes to see what I've been explaining to you. What have you noticed here? Where are we buying from? Come on, guys. Don't forget on the weekly time frame on Solana USDT, we are bearish, right? Except otherwise, right? Answer yourself question, where are we coming from? Where are we going to? Look to the left. What do you see? Look at this. Lower low, lower high, lower low, lower high, lower low. We broke how many structural points? 1, we broke 2, we broke even this one. So, but let's just say we broke 2 structural points. What can you see again? Everything that you are learning here is applicable on all charts, right? Look at this. I'll mark it out for you. Look at this. Liquidity sweep, 1, break of structure, 2. Where's your inducement liquidity? This is your inducement liquidity, right? That price came to take out, right? So, but you would notice something. I said something yesterday that, price is not always going to be picture perfect like this. Look at this. If you remember yesterday, if you have not watched yesterday's video, go and watch it. It's going to be a foundation for today's teaching. I said, price is not always going to be like this. It's not going to be like this, straight up. No, it's not always going to be picture perfect like this. I told you that price is going to give to you something like this. Liquidity sweep, break of structure, right? Price is going to be rallying like this. Then a weak high is going to be created again. Then the last, and I told us that because of how rough it is, price comes most times for the last low before the main low that swept liquidity and broke structure. If you were in yesterday's call, you can remember before we continue to move to the upside. All right, now look at this. So this correctly should be our inducement liquidity because that was the B leg. But where is the last low before the main low? This was the main low that led to the sweep of liquidity and this break of structure. This was the last low before the main low. Where did we turn from? Beat it. Beat it. So what did I say? The market seeks to do 2 things. Number 1, it seeks to attack liquidity, and the thing number 2, it seeks to rebalance and hold imbalance or mitigate another block, right? This was the other block that was responsible for this impulsive move. You can see it, right? We had all of this move that broke structure. You can see where I'm coming from. That is where we are coming from. Yeah. Where are we going to? If we are bearish, where are we going to? Don't forget on the daily, we took out the previous daily high and we have broken 2 structural points. So let's focus. If we are going to be bearish, we can see that we are coming from here. We are coming to where? Now look at this. We have the previous daily high that we are coming from, taking 4 hours as broken 2 structural points. But to have a clarity of mind, we have 1 hour 2 as broken structure again, right? So now ask yourself the question, right? You can see the blueprint I told you about. This is the blueprint. The blueprint is in the momentum push to the downside, right? That is where the blueprint is, right? So the question is, the main high before the last high that swept liquidity that lead to break of structure, where is it? Here. What is resting above it as your this is going to be your inducement liquidity. What is resting above it? We have imbalance. Are you seeing the imbalance that is resting in? That needs to be rebalanced. That needs to be rebalanced. I don't know if we'll talk about it maybe another day during this bootcamp. This is what people call the Quasimodo level reversal, right? What it means is that the last buy candle before the sell that led to the buy that swept liquidity, right? I don't want to get into it, right? Don't worry, don't ask questions about it, right? You don't have to ask questions about it, don't worry. It's so, but the beautiful thing is that you can see confluence is coming together, right? So we have the inducement liquidity resting just above imbalance. The market seeks to do two things: rebalance and hold imbalance. And number two, attack liquidity. Are you seeing it? Are you seeing what we have here? Right? So what are we expecting? Price will continue to run. All of these areas are liquidity point that needs to be taken. I know the mistake some of you will do. You will look at this like this and say, other block. Other block. You want to buy here, you want to sell here, it will kick you out. You will say other block. Other block. It's not all other blocks are tradable. Not all other blocks are tradable. The ones that are highly probable are the ones that have inducement liquidity that are resting either above or below it, right? So look at this. This is where, have you heard the word from a lot of people say, it takes a lot of patience to make money from trading. This is where the patience comes in. Imagine you are drawing your analysis from the daily, your 4 hours is confirming your entry, your directional bias, and you're using your 1 hour to look for entries. You have to wait for price to come to this point before you now short to the downside. That is the patience. That is where patience comes in. The patience is not like maybe you are just waiting so long. I mean, there's always a logic behind every statement that is being made, and that is the logic behind it. So let's look at, oh my God, we've used 1 hour. Oh, I don't even know. I didn't even know that we've used an hour. Mr. Geoffrey, we used an hour. We are sorry. Okay, let's round off. Let's round off, guys. I'm having a good time. I just wish we could continue personally for me, but I also have to prepare for church tomorrow. I didn't even know. I didn't even know that we've gone so far. Okay, so let me show you something. So let's go. Let's go. Listen. Let's use this as a round off, right? I don't want us to take so much time. Look at this. This is the weekly bias. Let's build bias now. Look at this. What do you notice? The previous weekly high was swept. Now, if you are looking at your charts, right, the logic behind all of these cells, right, is because the previous weekly high was swept. Ask yourself 2 questions that I've been saying since, if you have been following me in this class. I said, ask yourself 2 questions. Ask yourself, where is price coming from? Where is price running to? That is the idea behind liquidity. That is, price runs from one point of liquidity to the next point of liquidity. Look at this. It is not a mistake that price took out the previous weekly high and it came back here to take out an old weekly low. It took out another old low here again. It's not a mistake, right? What did I just tell you price does? When we were explaining it, I told us price runs from external to internal. Look at all of this internal liquidity here. It took it. Now, what is price doing again? It's running again. Maybe it's just coming from this next external, right? External, internal, internal, external. It's as simple as that, right? So, but let's go. Let's build bias. Let's build bias. You would have to learn how to do this yourself, right? Yeah, the session is recorded. It's recorded. It's recorded. It's recorded, right? So now look at this. We swept liquidity here. Come to the daily to confirm all of these buyers that we have here. And you see, now I want to show you something. Now you will see that, let me cut it. Now, like I said, weekly sweeps a previous weekly high or a previous weekly low rejects it after that sweep of liquidity. The daily is what confirms your weekly bias, right? Then you begin to look for entries or maybe your lower time frame, whichever works for you, right? So look at this. We swept liquidity. Don't forget where we are coming from. We swept liquidity on the weekly time frame. After this liquidity sweep, you can see, come on, guys, okay. Now look at this line chart gives it to you better. What do you have here? See now, we have liquidity sweep. We had this minor break of structure here. That was enough. This structural break that you are seeing here is enough, right? I told you that after weekly rejection, right, you must see two things you must see something on the daily: liquidity sweep and break of structure. You can see it here. Are you seeing it? This alone was enough to confirm the bearish bias for during USD, that we are having all of these massive sales. So let's say you missed out all of these sales. Now look at this. I want to show you something. Right, look at this on the daily. What can you see? What can you see on the daily? I want to point out something to you. A previous daily high has been swept, right? After the previous daily high has been swept, move to the line chart. What can you see? Right? You can see A leg, B leg, the C leg. I've explained the logic behind A to C. Does this model you're teaching apply to? It applies everywhere. I wish, this is not I will, this is a boot camp I could have shared. I mean, somebody on Twitter reached out to me. Sorry, I'm nose diving a bit. I'm saying this because of the person who asked for synthetic. Somebody on Twitter reached out to me on WhatsApp, right? And I was like, hey, I wanted to show you my progress on my trading. And he said I deposited $10 on synthetics and I made $50. I said, how did you do it? He said, from your chart. I save your chart on Twitter. He said, I save your chart from Twitter and I just go back to backtest and everything. And I was able to do that. I was like, wow, that's good. I mean, just keep at it, don't change anything. So, but look at this now on the daily. So it works everywhere. Crypto, everything. A leg, B leg, C leg. A leg satisfy the condition of a sweep of liquidity, break of structure. B leg becomes your inducement liquidity. And like I said, the volume is in the body. So what do you see? Let's take this off. So you have A leg has satisfied the condition of sweeping liquidity. You can see what I said. Massive move to the downside. Inducement liquidity. That's break structure. Where is your inducement liquidity? The last high. This is the last high, which is your inducement liquidity, right? Let's target. Okay, we can. Let's play this. Let's put it at 1. Let's go. 1. Beautiful. This becomes your external range liquidity. So like we said, price moves from what? Internal, external, external, internal, just like that. It's as simple as that. So what did you see? Yeah, look at this. Let me play again. Beautiful. You see? Are you seeing? Are you seeing? Are you seeing? Are you seeing how our external liquidity has been taken? Are you seeing now? Are you seeing now? So we have taken external liquidity. We might likely come for like an internal liquidity again before we continue to move to the downside. But don't forget, on the weekly time frame, we are bearish. So we want to only be looking for sales. But let's see what happens here. I go with user now on 7 minutes. You can see how we continued to sell. You can see. Are you seeing? You can see massive sales until all of these lows were taken. All of these lows were taking all of this. So look at what we have here. If you build a daily bias, now you are following weekly bias, the chart. Oops. So I want to show you something. No, how do I take that off? So look at this. Why do we have a short? I said to you, in a bearish bias on the weekly time frame, any buy you are looking for is going to be like a retracement. It's going to be shorter, right? So now look at this from the daily. Now look at what we did here. Now this is the logic behind it. We took a previous daily low, right? After taking out the previous daily low, we know that on the 4 hours time frame, we want to see a liquidity sweep. Oh, it can't work on the 4 hours. Let's just go back to the daily. my stuff will not work on the 4 hours. Let's go back to the daily. Let's go back to the daily. Let me take this out here. Yeah, beautiful. So this is the logic behind what happened here, right? This is the logic behind what happened here. We swept the previous daily high, mitigated this other block that is here. And what did you notice? Did I tell you about two things that should likely happen? The first that should happen is either you see a liquidity sweep and break, or you see what we call an engulfing. So what do you see here? We had a liquidity sweep. We also had the engulfing. So you know that, yeah, although we are bearish on the weekly bias, we can also take short-term buys, right? Because we can take short-term buys, move to the line chart. Line chart. Okay, line chart did not show us, but because of this engulfing on the 4 hours, this is the daily bias, but 4 hours is going to confirm for us with this that we actually swept liquidity and broke structure, right? So what happened? Let's pick. Yeah. So look at this. Oh, come on. You can see. You see. Yeah. Where did we come from again? We came from external to internal. Where is the internal? Yeah. It's not a magic. We're going to this again. So it's as simple as that. I mean, I wish we had a lot of time to put all of this together, but you know, you can make use of the video and just put in the extra work yourself. You can make use of the video and put in the extra work yourself. Let me, I don't, okay, let me see if, so give me a minute. Give me a minute, guys. Let me get something out. So yeah, I think we can all make use of what we have for now. I mean, we are 1 hour in already, 1 hour, 10 minutes in. I don't want to overshoot my time. All right. So, I mean, this is just it. The forms of liquidity. I guess we might still meet on Monday because I'm not always going to be available tomorrow because of church and as a leader and all of those things. I'm going to be available. All right. So, but Monday, likely, I'm going to make our time by God's grace to see that we all meet. Right. So, yeah. So guys, that's that. The recording is going to be made available. I want to ask Mr. Geoffrey, are you on the call? I'd like to make you the host. Are you on the call, sir?
Yes, sir. Yes, sir. I'm available.
Okay. Yes.
All right, all right. That was an amazing session. Wow, I really learned so much. I really learned so much. All right. So I want to really thank you all for coming. But thank God, I was even contemplating because he was saying I did not have time. So I'm really happy that he has agreed to, join us on Monday because I was even about to ask him if he'll be available on Monday because I know that tomorrow the fourth one will not be available because of his fellowship, church activities. So I want to really thank you all for coming. I want to give a special shout out to the fourth man for sacrificing his time. Most of these things that we are teaching here are things that people pay to learn. Like I'm very sure he did not learn it for free. So someone coming and give you these things for free, you really need to appreciate him. All right. So I want you guys to just take a moment to just type thank you, sir, Fort. Just one of the ways you actually grow is by showing gratitude. Just type thank you, sir, Fort. Not thank you, Geoffrey. Thank you, sir, Fort. Just type it there. Thank you, sir, Fort. Wow, wow. Just spam it everywhere. What you're doing is actually one of the ways that the Bible says without any contradiction, the less is blessed of the greater. When someone blesses you and you show honor to that person, right, that's honor. That blessing becomes yours, right? So that's why we actually show gratitude. It's actually a spiritual principle, right? Which I don't want to talk much about. So I want to really thank you guys for plugging on today. We'll continue tomorrow. I think tomorrow will be more of intraday trading. Since I'm the one taking tomorrow, I'll be focusing more on intraday trading, like lower time frame stuffs, right? Then on Monday, I think Mr. First one will come and conclude what he started yesterday, right? So I want to really thank you guys for plugging in. I will post the recording for yesterday, probably tonight. If okay, I'll do this night, so you guys can go through the recording of yesterday. So I'll post the recording of yesterday on YouTube this night, possibly before 10 o'clock, if I'm able to do that, right? So I want to thank you guys for plugging in. Wish you the best. Have a wonderful day. Cheers and God bless.